Tim, it's great to see you, and I'm going to get right to the heart of some of the concerns in the kind of pre-market here before things stabilized. What is going on with China's property sector shadow banks?
Well, there's enormous bad debts out there. There's a lot of help that the government can need to provide. There's an enormous amount of liquidity, and the speculation and the reverberation of that speculation to China's broader investor market, capital flight, it's significant. And other times when we've seen the property markets and either bad debts or the inability to really project where cash flows are coming for a lot of these folks that have stuff to repay, it's weighed heavily on the currency. And as you pointed out, the yuan is off about 2%, even in the last 2 weeks or so, when the dollar has actually rallied significantly. And a lot of that, I think, has to do with the yuan. But the property market's been hanging over, and the specter of a property market collapse has been hanging over China for almost a decade.
Yeah.
And so I'm not going to tell you that we should be sanguine about these risks. I will say that China is going to and is certainly cognizant of the risks, the broader risks for the economy.
No, I had the same reaction when this came back in the headlines. I felt like, is it 2018? Didn't we kind of I guess the answer is it didn't go anywhere, and this is what kind of zombification can look like. One weird quirk, and you know vastly more about this, maybe you can explain, is I notice as the dollar's rallying, our long bonds are selling off. So normally I think to myself, okay, global investors want, U.S. assets. Well, that's basically Treasuries. So you'd think everything would kind of, the yields would be kind of headed down all across the board. I guess this tells us that even in trying to get their hands on dollars or dollar assets, they're, kind of erring towards the short end and not the long end. Can you interpret that at all?
Well, my interpretation, I guess, is I don't know that they're totally correlated. I think the dollar's strength here over the last 3 weeks, and as you noted, through the 200-day, you can make an argument that the last time that the dollar traded upwards through the 200-day was back in June of 21, where it was going on a 28% move, really where, maybe we peaked last October or not. But the last 3 weeks, if you think about the dynamics between some of this is China, some of this is Japan, some of this is a Treasury refunding announcement, some of this is central bank differentials, what we've learned over the last couple of weeks out of Europe and maybe even out of Japan, that those central banks aren't as aggressive. So I think there's reasons why the dollar is rallying here. I would also make an argument that the dollar was one of the most short dollar, one of the most crowded short trades that we've seen against broader institutional investors. And I think that has something to do with it, too. Positioning was for the dollar to be weaker, especially before the Fitch dynamics. And remember back when S&P downgraded the U.S. AAA back in August of 2011, the dollar actually went on a major rally.
Yeah.
And so there's different ingredients here.
So let's zoom out maybe our chart. Do you say it was 2018 or 2019 was the last time we went up above the 200-day?
Yeah, I would say back in 2021 through the upside. So I'm saying in June of 21, the dollar actually in May of 21 was kind of at a cycle low. And then this was really the beginning of the Fed hiking cycle. And I would make an argument that most of the dollar and the Dixie price drivers are from central bank differentials. There was a long time, at least during that period, when we knew our Fed was on the back foot and needed to get front-footed. We didn't really hear from the Fed until October. The currency markets, I think, sniffed this out back in May. But it was June of 21 when it actually rallied through the 200-day to the upside. And that was an augur of a very significant dollar run. I'll make an argument. We've been in a dollar bull market for 15 years. We've certainly been in one for 12. It doesn't end overnight, but I would still be on the side of dollar weakness over the next year and a half rather than dollar strength.